Despite aluminium prices starting the year robustly, underpinned by concerns over a tightening supply outlook, with high energy and alumina prices, which hit a record high in December 2024, aluminium has failed to keep pace with copper and tin gains over most of this year, with the negative impact of trade uncertainty resulting in the World Bank downgrading global growth in 2025, in turn limiting the outlook for aluminium's largest end-use sector, the construction market. Meanwhile, the impact of Section 232 tariffs on all aluminium and derivative products, set at 25% on the 12th of March and then 50% on the 4th of June, was priced in early, with the negative impact of higher domestic prices well understood, given that aluminium faced similar, albeit lower tariffs on imports during Trump's first term in office. Furthermore, despite robust demand for aluminium in China, in fast-growing demand sectors such as solar and renewable energy, overcapacity in the sector is set to see growth levels having peaked in the first half of the year, while domestic demand for China is on course to hit a new record this year. Looking to the months ahead, attention will be paid to the disparity in global stocks, muddying the outlook for a global price trend, with regional divergence expected. However, upward momentum should be supported by low stocks on the LME and indeed seasonality demand in China. We see aluminium as holding robust fundamentals in our forecast for the years ahead, with the market moving out of surplus and into a deficit by 2027, as healthy demand projections from renewable energy and power sectors are further supported by aluminium's role in being a substitute for copper. As China approaches its capacity ceiling for production of 45.5 million tonnes by the end of 2026, the future of output will become more reliant outside of China, increasing the risks associated to supply disruptions and increasing China's reliance on imports to feed domestic demand. Global production is forecast to post healthy output in 2025, growing 1.8% year-on-year, supported by a record level of output in China, where low raw material costs, alongside favourable weather conditions, have supported output from both hydropower and coal-powered plants. Meanwhile, outside China, the ramp-up of new capacity additions in India and Indonesia will support steady growth, offsetting struggling European production, which was negatively impacted by the loss of more than 1.5 million tonnes per year of capacity over 2022 to 2023 due to high energy prices. Having said this, we forecast the return of Alcoa's San Cipriani smelter in Spain in 2026, which alongside diverted Canadian refined units away from the US, will help to alleviate tightness in the region. Further looking ahead, with China set to reach its production capacity ceiling of 45.5 million tonnes a year by the end of 2026, and in our view, limited ability for this to be altered, output from the world's largest producer is expected to significantly pull back in the years ahead. This in turn will increase the pull of ex-China refined units into the country, which are already on track to post a record high this year. Therefore, the success of capacity ramp-ups in external countries is pivotal, which in part, supported by Chinese investment, is set to result in around 0.5 million tonnes per year of output increasing from countries like Indonesia over the next 3 years. Aluminium demand is on track to post growth of 1.8% year-on-year in 2025, a slowdown from 3.5% year-on-year in 2024, with robust Chinese demand unable to offset disappointing consumption in advanced economies. Within China, front-loading of solar installations in the first half of the year and increased investment in renewables and power sectors underpin demand, compensating for declines from the construction market. Looking to next year, we expect declines within construction to accelerate, while core growth will stem from new energy, transportation, power, and the electronics industry. Outside of China, we forecast Western rate cuts should help to encourage the return of cyclical demand, which alongside consumption from the energy transition will push the aluminium market into a building deficit from 2027. Growth will be focused especially on investment in the Middle East and India.